Hello, my name's Chris Kohansky, wheat merchant with the Emerald Group, and welcome to the first of our 2008-2009 wheat market update. At the moment, many of you will be engaged in the harvest or getting ready to do so, and we hope that some of the information provided today will be useful in the marketing decisions you'll make in the coming weeks and months. At the forefront of everyone's mind at present has been the extreme volatility that we've seen in international wheat prices. Just to put that into perspective, we've seen US futures values in the last 2 months fall from 800 cents a bushel down to 550 cents a bushel, which is a retracement of around about 350 cents a bushel. That equates to approximately $130 downside for US farmers. On the other side of the coin, Australian farmers have only seen a retracement of around about $60 a tonne. Now, this protection or the lack of erosion can be directly attributed to the fall in the Australian dollar over the same time period. So while we've seen extreme volatility in Chicago Board of Trade values and Australian dollar values, it's actually transposed itself into having quite a stable effect on domestic pricing. As an example, last week, Australian futures opened the week at $272 per metric tonne, and they closed the week at $271 per metric tonne. Now, the big volatility has been seen in the Chicago contract, which, despite its faults, is still the best yardstick as to international prices. The Chicago Board of Trade has come under pressure on 2 fronts. The initial one has been the credit crisis in the United States. Historically, the funds have been the long holders of wheat in the Chicago Board of Trade contract. And due to the credit crisis, they've been forced to liquidate a large percentage of their position. As the funds have been sellers in big volume, that has placed pressure on the prices, and as such we've seen a retracement in that contract. The second front is the fundamental factor that the globe has actually produced an 860 million metric tonne crop. To put that in perspective, that's a 60 million metric tonne increase on last year's production levels, and what it has meant is that for the first time since 2004-2005, global wheat production has outstripped demand. We've only seen that once or twice in the last decade, and we have not seen the extent of the increase in production this year for quite some time. Domestically, there's also been a change in the way the wheat is being priced. For the first time, Western Australian and South Australian wheat track contracts are trading at a premium over the New South Wales contract. We're still seeing very strong demand for prompt wheat into Southeast Asia and also into the Middle East, and we expect to see that continue into the first quarter and first half of next year. The increase in global production has mainly been into the Northern Hemisphere, and we're seeing price pressure being placed on us from Black Sea wheat with Russian and Ukraine wheat. Although their quality is very much behind Australian quality, their prices reflect as much. We're also seeing pricing pressure come from French and German wheats, and we expect that to remain for some time yet. On a positive side, Australian wheat is very well priced compared to its US quality wheats. At the moment, we are priced to get business into Southeast Asia and into the Middle East, and we expect that to continue for the foreseeable future. So in summary, despite the extreme volatility we've seen in these markets, there is some stability coming back into it, and we are seeing strong demand into many of Australia's natural homes. We expect to see that continue into the future and hopefully deliver some good wheat returns to the Australian wheat farmer. I hope we've answered some of the questions you may have had over the last couple of weeks, and if we've actually instigated some questions, please feel free to give us a call, and our contact details can be garnered from our website, which is www.emeraldgroup.com.au. Thanks for your time.